So there are a ton of legendary names that ring throughout Wall Street that are both admirable and just influential. Names such as Warren Buffett, Benjamin Graham, Ray Dalio. I mean, the list could honestly go for a lot longer, but one name in particular that I want to go ahead and highlight in this video is legendary trader and investor Paul Tudor Jones, as he's recently done a little talking panel with CNBC today, talking about a lot of the headwinds facing pretty much this country and equities, right? So talking about if you're a market participant, whether you're a trader or an investor, that are pretty much concerning. And he covers some topics like geopolitical issues, what's going on fiscally, and also just domestically with our politicians right now. And I definitely think that if you're someone who's easily triggered, maybe you shouldn't watch this interview or this clip, as I think it's definitely going to ruffle some feathers. But if you're open to hearing a different perspective, I definitely encourage you to watch this video in its entirety, as he hits a lot of points that I could kind of pretty much agree with. So with that said, I want us to just look into this clip right over here.
Would you want to own equities? I mean, there's also the question of what you think is going on in the United States with our economy, with the rest of the world, with what the Federal Reserve is or isn't going to do.
It's a really challenging time to want to be an equity investor in U.S. stocks right now. It's really hard because, again, you've got the geopolitical uncertainty, which I think, come to live with to a certain extent. But again, all those have the ability to have a nonlinear outcome. So something not just business as usual. But I think equally as much of a problem is the fiscal situation that we're facing in the United States, which is going to require a completely different political mentality to what governs it.
That's pretty telling. So we're, the real possibility of a nuclear war is there, but our fiscal situation is just as bad. That's a statement. So black swans, Paul, they're not black swans anymore. They're actual quantifiable risks. We need a new word for black swans. There's like 4 or 5 of them that used to be, you didn't even have to really, if it happened, we're all gone anyway, so you don't worry about it. But now they're actually something that are on your radar. Well, so is a pandemic, which was on your radar in Davos before anyone knew the word.
I would say the fiscal situation is very different from other cataclysmic events that we've suffered as a country. It's not Pearl Harbor. It's not 9/11. It's not COVID, where we did not see them coming. They were external shocks. The fiscal situation we have is one that's really clear. And there are obvious remedies for it, and it's something that we're going to have to deal with. It's not part of the political dialogue yet, really. I don't think so.
Entitlements again.
Well, it's a variety of things.
But mostly.
If you just think about what's happened since really in the last 3 or 4 months, we're getting ready. I don't know if we'll have a Minsky moment in the bond market. I don't know if we'll have that point of recognition, but we're going to have the grinding reality that with 122% of debt to GDP, as interest costs go up in the United States, you get in this vicious circle where higher interest rates cause higher funding costs, cause higher debt issuance, which cause further bond liquidation, which cause higher rates, which put us in an untenable fiscal position. Our interest bill is going to very shortly exceed our defense spending in just a couple of years. It's probably in 4 or 5 years, ceteris paribus, we'll have the highest interest bill as a percentage of GDP that we've ever had. It'll probably be close to 20% of your taxes will go to pay interest on the debt unless we do something. So that has to be part of the dialogue. Has to be the main dialogue for next year's presidential election. And right now, the real problem is the 2 guys that put us in this situation, and I think that's what the bond markets kind of recognize as we get closer to primaries, are the ones that are our choices for president. And can you imagine Donald Trump or Joe Biden? They're the ones that start this. It actually started with Trump, right? Trump in 2016 was going to come in and he was going to cut taxes and cut spending. Well, along the way, cutting taxes is a great idea, but he didn't cut spending. So he inherited a 2.6% budget deficit. In 2019, it was 4.8% before the pandemic, so it almost doubled. And then in 2020, it went to 14% with the pandemic. But he's the one who, with a strong economy, said, I'm going to double down and cut taxes. We're going to grow our way out of it. Joe Biden, when he got elected, said, the sugar high is pretty good. You had 2 or 3 Oreos. I'm going to eat the entire package. And the Build Back Better Act was really the Build Back Debtor Act. So between the two of them, we kind of added 20% of debt to GDP. Neither one of them, the people that created the problem, as Einstein said, are not the ones to fix it. Neither one of them can be president. It's that simple.
Is there a candidate that you like, and is also there a candidate that you think has a chance, given the numbers that we see today?
Well, it's going to be really interesting. No Labels will probably nominate Joe Manchin. We, as a country, freedom's not free, right? That's the old saying. We love to laud our troops who put their bodies and souls on the line for this great country. Clearly, we're going to have fiscal retrenchment. We're going to have to sacrifice. We're going to have to cut spending. We're going to have to deal with entitlements. We're going to have to change Social Security. We're going to have to limit Medicare and Medicaid. We're going to have to raise taxes on the very wealthy. We're going to have to unequivocally raise taxes. The United States right now has the 5th lowest tax take out of 40 OECD countries. So there's plenty of room for us to raise taxes.
Would you have shut down the government? Were you with those guys that said we need to take drastic measures? They say the same thing about the 33 trillion, and we're never going to get anywhere.
Yeah, the problem with them is that they only look at one side of the equation, which is that we have to cut spending. They are unwilling to talk about the other side of the equation, which is we're going to have to raise taxes. You cannot do this simply by cutting spending. We have right now, here's what the bond market is telling you. Last year, or this year rather, we had $2.3 trillion of funding that the private sector is required to find the funding for. So that has caused a 100 basis point spike in bond yields. In 2024, it's going to be $2.7 trillion in the U.S., $2.7 trillion, almost 10% of our budget is going to have to be to fund our federal spending.
So it doesn't matter what the Federal Reserve says at this point. They've lost control. This is going to be the bond market talking and setting.
Yeah, the bond market. So what's happening is, and why we're probably going to go into recession sometime in the first quarter of next year, probably because the bond market, simply through supply and demand, is going to deliver more rate hikes, because we don't have a clearing price yet for long-term debt. And so those rate hikes are probably going to tip us into recession.